For more, Structured Finance Association CEO Michael Bright joins us now. He also served as Ginnie Mae's chief operating officer from 2017 to 2019. Michael, great to have you with us.
Thanks for having me. Good to see you guys.
So when you think about this plan to return them to the private sector, what are your biggest concerns? Because you think of a company being publicly traded, and you think about the things that they do to juice returns, to return more money to shareholders, and those may not necessarily align with keeping the mortgage market safe.
Yeah, no, that's exactly right. I mean, that's really what we had as a model in the lead up to the financial crisis, and it contributed to the demise of these companies. And so you really want to make sure that if they are removed from conservatorship, that you keep in place some guardrails and some protections to ensure that they are focused on their core mission. That's really the long-term return that you would have with moving them out of conservatorship.
What's the benefit for, I guess, the investing public for them to go back into a publicly traded company? Talk through the whole, I don't know, the mechanics of it and why people would want that.
It's hard to know exactly what the benefit would be without seeing the structure, the overall structure. And all we've seen so far is a couple of posts by the president. So there is an argument to be made, and reform efforts in the past have attempted to separate the government's role in ensuring liquidity in the mortgage-backed securities from the risk-taking role of private enterprises that could potentially go insolvent and undergo some sort of a resolution mechanism, be it a Title II Dodd-Frank type resolution or something like the FDIC would they take a company into receivership. But in most reform plans that are comprehensive, you have a very clear backstop that the government would provide liquidity to the MBS so that the mortgage-backed securities holders aren't taking on the credit risk of the underlying companies themselves. Thus far from the administration, we haven't seen any details. We don't really know what the government would do with the stake that it has. That's a hugely important question. And really what would need to happen is the government would need to clarify when and under what circumstances it would step in so that the bond market can price certainty, not speculation.
It's Karen. Thanks for being on. So much has been talked about explicit, implicit, the government backstop. How much does that actually matter to the rate of a standard mortgage?
Hugely. It's very, very, very important. I mean, agency mortgage-backed securities, so Fannie, Freddie, and Ginnie MBS, trade very tight to treasuries, so that is in price on the bonds, which lowers the rate that borrowers actually pay for their loan. That is largely a function of the fact that the government has a very clear legal relationship with the companies right now. It allows banks to put them on their balance sheet with very low risk weighting, so low capital requirements. Foreign central banks can buy it. Our central bank buys these mortgage-backed securities in times of crisis and to lower interest rates. None of that can happen if they're just purely private companies and the market's supposed to anticipate that they would always get bailed out. Asset managers, insurance companies, a lot of that capital will need to be reallocated. And so right now, the investors of all of these MBS is looking through their agreements and trying to decide whether this would be a credit investment or an interest rate investment. It's unclear to me how the twin goals of spinning them out of conservatorship, absent clarity around the government's role, while also not impacting mortgage rates to borrowers. They seem to be saying they want both of those things to happen, but a lot of work needs to be done in order for that to work.
I mean, it sounds like a huge mess if MBS were viewed as a credit, right, as opposed to Treasury-like investment. So what can the government do to actually say, you know what, we are going to backstop to the degree where MBS should be just as safe as they are today with Fannie and Freddie privatized?
Well, the best thing would be for Congress to get involved and to clarify what the government's role is going to be, and they can put a congressional stamp on it, and then investors know what they're getting. That's exactly what you have with Ginnies. And when I ran Ginnie Mae, I would go around the world and talk to central banks and go around the country and talk to investors, and they all knew that the government's role was very clearly defined. And Ginnie didn't even take any losses during the financial crisis because it was a backstop that was deep in the capital stack. Without Congress, without something like a Ginnie Mae, I mean, they would need to do some sort of machination where they would have a very strong, government preferred share purchase agreement, the PSPAs, which they have right now, and some sort of arrangement between Treasury, I guess, and the enterprises, saying that Treasury would always backstop them. But you're pulling at a thread, and it's not really wise to do that all administratively. So it would be good to have it explicit. It would be great to have Congress involved.